Hi, traders. You're in for a treat. Today, with my co host, Mike Venezia, we have the opportunity to hear the life story of Timothy Furey, who was CEO of TradeView Markets. Tim went the distance to creating an international brokerage firm. And the journey was God bless the broken road, huh, Tim, that brought you to TradeView and where you are now.
Yeah, it's a story and a journey. It's an honor, Dale and Mike V. Congratulations on your success with TradeGate Hub. I love the interviews. I love what you're doing. I'm tuned in, man. I'm tuned in, and I'm ready for this. Let's go.
Okay, so Mike, and you have you have history. You have a relationship. You're friends. Mike goes back to the Florida days, and has watched your journey since then. So, Mike, why don't you open it up with your friend and
how did the pits of Chicago basically mold you for building a business that is not only trader mentality predicated? This is a building blocks of several things: of business acumen, timing, trading. We started small, and we started, we were our own human resource department, if you will. So how did trading in the pits start you for, or build you a foundation for just taking off?
Let me tell you the story on how I got there. The reason I'll tell you the story is because the people watching this, they're gonna see that I walked in the same shoes that they walk in, right? So, I went to college, and my last year I needed to do an internship, and I wanted to be a trader, right? So, luckily for me, I was able to get an internship at Lynch. This was in New Haven, Connecticut at the time, and I was lucky to get the internship. I even called to tell him, listen, I'll work for free. Can you do me a favor and put me with the top producer, so I can learn from him? I'll get
a deal back then.
So they did. She did. The human resource person did. I worked with one of the top producers. I didn't go to Yale University. Yale University was in the same town. And the guys that went to Yale were working for, per hour wage as interns. I was working for free, but they were on the phones working for the smaller brokers. And I was in the office with the guy with his feet on the, laid back, feet on his desk. And he was just telling me stories all day. So that's how I started. That's where I got the interest. Now, what really did it for me, I was always an entrepreneur. And so I'm doing this internship, and back then we had to write, what there's day in a book, right? And, nobody wants to do that. It's the most boring task ever. All right, I know what I'm doing now. This is the business for me. So that was what really made me want to get into the business. And I love the commodity markets. I love the futures, and I started learning more about it because it's a fast moving market. So I became a commodity broker, at a small company. And this is back then when you had to get on the phone, you had to dial, and then you have to give recommendations, and, the company did some advertising. This is me being a broker, but, I just didn't want to be on the phone, right? I was
just a trajectory. Yeah.
So, so I'm like, well, if I'm going to learn to trade, let me get a lot of clients, and then I can ask the boss, hey, I want to get a screen. I want, to get the software. I want to analyze the markets, because I had a passion for it. And then with that passion, I read every book possible that was out there on trade, right? Not only that, I seeked people that knew how to trade. Bought the stock at $8. At $8, right? And I sold it at $14. Like trade for money, and then I want it back in after the crash. My parents, Tim, this is too risky. I was only 16. Too risky. Let me get back in this. Peter Lynch. This is when the time to buy. Warren Buffett, all that, right? No, too risky. Anyway, this was the biggest stock mover in history back then, right? It went from $8, 15 to 20 to 30 to 60, split 4 times. 20, 40, 60. That $10,000.
You were onto it early, and
You're a millionaire. I'm a commodity broker. I'm learning everything, reading every book. I have screens. I'm trading the markets, right? And then
In Atlanta.
at a conference, I meet, the manager of the Merrill Lynch Futures Division, right? And always been a fan of Merrill. Did my intern at Merrill. And I told him my story. I'm like, yeah, this is me, and this is the book of business I have. I have all these clients. He looked at it. He was like, this is unbelievable. He's like, come to my office tomorrow. I'm like, all right. So went to his office, one meeting. He flew me to go see the manager the very next day. And then the manager, when I walked in, it was an old timer, and his name was Bob. He was an old timer, talked like this. He used to trade in the commodity pits. This is what I always wanted to do. But he used to trade there. He's like, Tim, I just threw out 10 people the other month that wanted a job here. What makes you think I want to hire you? I'm like, well, you spent $1,400 on a ticket to fly me here the very next day, So anyway, that, and I'm like, let's talk about results. Let's talk about my passion, and hopefully it's a fit. And they hired me. I was the youngest guy they hired, like in 30, 40 years. Now, it was Merrill Lynch Futures, so it was the old timers, and it was only a group of 60 throughout a company of, like, you're talking about 40,000 brokers, right? It was a very small group. And the old timers, all they had to do is, they were already established. They wanted to talk. They wanted to teach somebody. And that person was me. Woo! So my ultimate passion was the guy, Bob, who hired me. He was a trader in the Chicago Board of Trade, right? I'm like, dude, that's my passion. That's what I want to do. And he's like, you want to do it? Go for it. Yeah, I'll connect you. So he's the one that connected me to the people at Chicago Board of Trade. And it led my opportunity where I just dropped everything in Atlanta in my book of business, moved to Chicago. I moved in don't ever move there in January. I moved after a snowstorm, and I'm like, from Atlanta, Georgia to Chicago. I moved there, and right after a snowstorm, and I'm like, what the hell am I doing? So I'm like, what am I doing? And then the worst part was, I still had to take a couple tests, right? Then I had to go through the training to be a trader at the Chicago Board of Trade, and so you got to yell and scream, bye, learn all these hand signals. And then, so you go through the training course, and I'm like, what am I doing with my life? This is crazy, right? And everybody was so mean in that pit, right? They're so mean. Even the guys answering the phone, the meanest people in the world, right? It was a no-nonsense kind of environment. It was like a fraternity, right? It was like me being the kid that was picked on, right? Because anyway.
Fresh meat, they look at.
You were never picked on.
Yeah. So anyway, this is going to the Chicago Board of Trade. So I got a badge. I'm all excited. I got my trader's jacket. Now I'm an official. I passed all my tests, did the training. Now I'm a market maker, right? So
then you have like the green jacket, right? Or the yellow jacket?
Mine was red.
Yellow was runners, Mike.
I apologize. I never got to even be that red. Oh, all right.
And now
all I ever wanted was the jacket.
The company, now, here I am. I'm a rookie, right? And there's some big timers at this place. So for me, it's a dream come true to learn. And, wearing the red jacket, got the badge, and I picked WWI, right? It has nothing to do with my name. It's just like, you only have 3 letters you could pick or numbers, And I found, I'm like, you know what? WWI, World War I, right? So everybody started calling me World War I in the pit. So they remember my name, right? So the new guy, they'll actually do some trading because they remember my badge number.
That was actually your nickname, World War I.
Yeah, WWI.
And I did that. Hold on.
So now I had the red jacket, I had the badge, and then now the clearing firm back then it was called SMW Trading, and the one of the owners or one of the guys that teaches the traders was this guy called Sydney. So what I was called a Sid kid, right? Doesn't mean autistic, right? I'm good with numbers, but yeah, good kid, right? So it means I'm trained by Sig. Now, this is the difference between Chicago and the rest of the world, and especially New York. In Chicago, what they do in the pits, they teach you defense. That's all they taught you is defense, defense, defense. Now, what does that mean in training? So what they taught me is what you're going to do is you're going to go, let's say you go by at the bid, right? You're going to get out right away at break even. It's called the lean, right? There's other people bidding, right? You're bidding at the same price. You get in and then you're getting out right away, break even, right? It's called lean, right? So you're taking on paper and you're getting out break even. All right, I'll do that, So you're going through the program and you have to do what they said, right? Or else they'll get very upset with you and mean with you. Like they treat me like a 6-year-old kid with their training, which, I had a lot of pride, but I'll tell you what, you get to stay in there training, you have to do it. So here I am, blah, break even. Okay, next thing is, you try to make, 5 ticks, so in, 5 ticks, right? All right. But the thing is, you're not allowed to lose more than 5 ticks the entire day, right? So the minute it goes against you, you have to get out, right? So here I am, all right, bye, I got the lean, and boom, market ticks down. You have to get out right away. You have no choice. 5 ticks. If it's over 5 ticks, you have to explain it, right? 5 ticks is fine. Break even is fine. Anything over 5 ticks, you have to explain it. So at the end of the day, the next morning before the trading day, you lost on this one, you lost on this one. What happened here? What happened here? 5 ticks here. Here's one for 10 ticks. What happened here, Tim? And I'm like, we're going to say, okay, all right, that happens. You got out of 10. Fine, right? Okay. So then I would ask, all right, so how do I make money? It's like, we're not here to teach you that yet. Get in the pit and do what we tell you to do. I'm like, great. So I'm doing this for a month, right? Break even, take a small loss, maybe try to make a, 5 ticks, 10 ticks here. One day, I have a trade that I lost 20 or 30 ticks, right? They pulled me out of the pit, scream at me, what happened here? Why didn't you get out? You could have got out of 5. Yes, I'm like, yeah, I could have got out, but I thought it was going to bounce back. They scream at you, and then they suspend you for a day, right? They get mean with you. It was like insane training. It didn't make sense to me. I'm like, why don't you just teach me how to make money? So we did this for 8 months. And it was annoying because I couldn't take more than a 5-10 tick loss. And if I did, I had to explain it. And if I was able to get out, they would scream at me, suspend me, they throw me out of the office. They never taught me how to make money. And then I remember my 8th month. All right. Dude, I think I made about I made $28,000, right? And this is my 8th month in. I'm like, yeah, because this is what market makers do, right? I'm like, all right, listen, I think I've proven to you I can do your thing. Now, can you teach me how to make money? They're like, okay, come, sit down. They sat me down on the table, and they're like, all right, let's look at your month, right? Okay, here's winning day. When I had out of all the, let's see, out of the 20 trading days, I had 2 losing days, right? All right, let's go over this losing day. I'm like, all right. They're like, what happened here? And they took out the logs of the trade. Well, I had an out trade, which means a bad trade of another trader.
Yeah, I'm going to ask you. Yeah, people have lost their seats over out trades.
Yeah, I had an out trade. It was maybe $1,000, which a lot of money to me back then, or to a small market maker. They're like, all right, that happens, and you solved it before it went further. Yes, good. Okay, what happened on this day, Tim? You had another day of loss. And they're like, taking out trades you had. Here you go. You had a 20 pip loss. And they're screaming at them. I'm like, guys, I only lost 2 days. I made $28,000. How are you yelling at me? I'm doing everything. They're like, you're not doing everything. You lost 20 things. I'm like, oh my God, I don't know what to tell you. Could you just teach me how to make money? They're like, Tim, that's how you make money, is you don't lose it. And I was like, oh, they're like, look, they circled the 28,000. Did you make money? I'm like, yeah. They're like, okay. That's how you make money. You don't lose it. Right? So what they're training your mind is the risk management part is getting out. You're playing defense. And because I'm scared shitless, they're going to scream at me and suspend me for the day, or, take me out of the pit. I better get in a trade, right, that I can get out of, right, that I know I can get out of. And then if it ticks in my favor, great. I'm bidding out. I'm offering positions out, yelling and screaming, doing all that. And I make a little money. And at the end of the month, there I am, $28,000. So, that's, I guess, where it all makes sense.
Well, let me say something. The basis of when we started to grow, I was one of the first here. You have to actually give. I think you are indirectly giving props, because that's the basis of our risk management, which is our basic, our greatest acumen at trade view. No.
Yes. Yeah.
I mean,
yeah.
that was the story here, culminating in when you said talk about the pits. That's what the basis of TradeView, besides our extending platform and the marketing. But that's where you were. That's how we're able to have all our accounts and our brokerages across the world, by you having this basic discipline. It resonated there.
Yes. Yeah.
Bravo.
You have to have the mean, and you have to have the discipline to get out, and you have to have great risk management. And risk management isn't about making money. It's not losing it. That's what risk management, that's the way I was taught. And I held it to.
So even though it was frustrating for you, sometimes the hardest lessons are the best lessons.
Well, the best views are from the hardest climbs. And certainly, as we get on with Tim's story, he didn't hit an option. He didn't hit a big, $1 million option play. This is 20 years in the making. So it's building on blocks of knowing how to trade, risk management, being a CEO, knowing how to put together a team, a good team, and that's where we're going to culminate with finishing the story. So, Tim, where did you find yourself next after that?
Well, again, the commodity pits it was just a crazy chaos every day. You had to stand up, yelling and screaming, buy, sell. And then we had the threat of electronics, right? This is in the late 90s, where everything was going to go electronic, trading was going to go electronic. Back then, they just came out with the mini S&Ps, right? E-minis.
That's when So's showed its head, and that's when everybody's really making a lot of money with So's.
Right. So, there was the frat house environment. Everybody's angry. I think the divorce rate was like 95% in that pit. And the big thing with the pit, it's all about machoism, and you got to earn your spot. And then.
Well, you were a fullback in college as well, correct?
Yeah. I was fullback in college.
Hence the 3-point stance.
Yeah.
By the way, he didn't even get out of Chicago yet. He didn't even get to Florida. So, yeah.
There's the threat of going electronic, and then there was the, standing up all day, and I've done it for enough time where I learned everything, and it was another winter was coming in Chicago. I'm like, I asked myself the question: I'm either going to make $1 million next year, or I'm out of here. That was my price to stay in Chicago. And I thought about it. I'm like, I'm probably not going to make $1 million or come close to it. And I could actually lose money and work a whole year. Who knows? Right? It's too much risk. So I got out of Dodge, packed my car up, get out of my lease in my apartment, and went down to Florida to warm up. So that's how I got to Florida.
And there was where was the inspiration to say, you know what? I'm going to start my own company, my own IB, my own clearing firm. How did that evolve for you?
Well, let's.
There was one more important step before, this CEO was started. Go ahead, Tim.
All right.
Did you have a plan when you headed to Florida, or was it just I got to get out?
Yeah. So I'm living in Florida between opportunities, which means jobless, living with my parents. I was looking for the next opportunity. It wasn't like New York City. I remember Mike saying one day, he's like, when we drive to work, I see people in suits. And honest to God, I don't know where they're going. Right? You remember that one, Mike? So, and it made so much sense. Like, when you see people driving to Florida in suits, like, where are they going? Like
the Motorola back then, another. Where were you gonna go?
Yeah. So then I go to a bar and watch a basketball game, and two guys I'm sitting next to, I had these New York accents where I'm from, and we started talking, and they actually one of them lived in my hometown. It was 2 years younger than me, and had a crush on my girlfriend that I dated in high school. And he's like, yeah, I wanted to beat you up, He said, I'm crushing your girlfriend. And I'm like, oh, man, well, sorry about that. But anyway, we got talking. He's like, yeah, I know you played football, and you want to play rugby? Why don't you come out and play rugby with us? I'm like, well, nothing else going on. I'm like, sure. So I went out to a rugby practice and started playing rugby, which I fell in love with within a couple of practices, and just kept playing for 20 years after that. And this is when I'm 30, so I picked it up. I loved it. And then I got really involved in playing rugby and enjoying it. Now,
that's another, if I may say so, Chicago, you learn to really have I would guess the risk mentality. Now you get into Florida when you're living with your parents. Now that's where you picked up the rugby mentality. So you're picking things up along the way. It's not really anything you didn't know it at the time, but still,
right.
Go ahead.
Right. This is the first time, other than playing defense in Chicago. Now this is offense, and this is the first time where I saw from my own eyes, how to make money in the markets and what to look for. And it makes sense because it's not the relative strength, relative weakness indicator, right?
Right.
You go in here and it goes up here, you sell, go down. No, complete opposite. What it is, it's a method for measuring the performance relative to the overall market. So to give you an example, a stock, it has relative strength when it performs better than the index over a period of time or during the day, right? So it's one of the most simplest but most important concepts for a trader to understand. And the people that are listening, let's look at Yahoo, right? Everybody knows what Yahoo is, right? When it had its big move up and then its tremendous move back down. This is when Yahoo was like under a $10 stock in the 90s and went to $400. And I remember in 1999, it was at $400. Everybody in the trading pits back then were like, Yahoo, when it hit $400.
They had those buttons. Remember the Yahoo buttons? People would press the Yahoo button and it would go Yahoo all over the place.
Right. So, this was a hot stock. And when you watch, TV, and what the TV saying is every analyst is saying, oh, it's overbought. It's the PE ratio is not, makes sense. Every analyst out there is like, short the stock. Every trader I knew, short the stock. What'd the stock do? It went from 10 to 20, 20 to 40, 40 to 60, 68, to 100. Now it's a great sell. 110, 120, 150. It just kept going high, right? Now, if you believed in relative strength and relative weakness compared to the market, you would never have gotten in front of that stock and shorted, right? And here's the thing. Take a chart, right? Put it on the floor, right? Stand up on your chair, right? Look down, blur your eyes, right? What direction is it going? It's going up. So don't short it. You buy it. You find a place to buy it. It's that simple, right? Don't try to pick a bottom. Don't try to pick the top of the stock where to short it, right? I guess the rule is the eighth rule, right? Which can make you broke. If you're trying for the start of a stock move on the bottom eighth, or you're trying to take your profits at the top eighth, right? That's where you're going to lose all your money. And
I'm sorry, there is a cliche. I forget who it is, Coach. I put it on TradeGate up the other day that trying to catch the first ace and the last ace will cost you wind up costing you more millions than you. That's right, Tim. And the whole firm, once again, another building block that you learned when we were together at Schoenfeld was the whole thing that you took from there was relative strength. Another pillar to which TradeView Markets is built upon.
Yeah, so Tim, Mike and I talk about it when we do streams. When the market's red, we want to know what's green, and that's your philosophy. So we want to buy what's green on a weekday because there's your relative strength. And when the market's green and certain shares are red, that's telling you those are not stocks you want to own, that they're your sell candidates. So you're right. It's so simple, but the most simple things are the most powerful things.
Right.
And
let's do like stocks. Yeah, you know what I mean? Or a sector that does the opposite of everything else. You got to ignore that. But let's say you have software, you have technology stocks, and then you have healthcare, right? Let's say, the market is strong. All right, the market is green for the day, right? And it's relatively strong. So what you do is you're looking for the strongest sector out there. So let's say it's technology stocks are the strongest stocks out there, right? What stock is up the most or acting the strongest? Right. That's what you look at, and that's what you focus on for the day. So, the thing is, if the indexes start coming in a little, right, this is how you gauge it. You see what stocks are holding up. The strong sector, you see which ones are holding up. That shows you just the buying behind it, right? Buying, most likely, there's going to be three scenarios, right? The market the index stays steady, the stock grinds up, right? The market goes up, this market goes up fast, this stock goes up faster than the market. Now you know you're on the right stock, right? Or the market goes down, right? And this stock trades sideways and doesn't go down. Now, the fourth scenario is when you're wrong, it goes down. You get out. You pluck your weeds and you water your flowers, right? You hold on to green, you add on to your greens, and you always pluck the flowers. Now, being the owner of a company, we have 100,000 clients, right? I see the trading. And what annoys me the most is when markets go up, what do they want to do? They want to short it. When markets go down, what do they want to do? They want to buy it, right? That mentality is not going to make you a winner. What it's going to do is, they say markets consolidate 70% of the time, right? So when you're doing that, you get rewarded. You get rewarded. When the market's down, you're buying. When the market's up, you're selling, right? Or you're shorting. You get rewarded because it consolidates, but you get rewarded a little. And then you're managing out of a position and taking a loss here, a loss there. So you're making money doing the wrong thing. Then all of a sudden, the market breaks out. You lose everything you made plus some, because you didn't follow this strategy.
All right, well, we're going to have to do a sequel to this interview, Tim, because we only covered the beginnings of your journey into TradeView. We haven't even gotten to TradeView, but I tell you what, there's nothing like real life experience. You can't learn experience. You have to live it, don't you? It only happens with the passing of time. So some of the younger traders not only have to be patient with the market, they have to be patient with themselves, because time is experience, and what you knew in the pit compared to what you knew 5 years later was night and day. So everything takes time. So interesting journey that you've described to us so far, and looking forward to hearing the rest about your shift from a trader to an entrepreneur.
So we have so much more to talk about, which means we'll do another podcast. I promise to come back. We'll maybe do it next week. And, again.